time comes, then you could rotate into the shit coins and like actually start doing that sort of stuff. But that environment just does not exist today. It's a totally different space. Anyway, I was just looking at this chart here. I know it looks really, really terrible and messy, but what I often do is I use these lines. I draw what I think could potentially happen, so you can see like my thought process and how wrong, how terribly wrong I've been multiple times. But if you just look at that black line, I know there's so many lines. So what's this in December 2024? So this is when Trump's just come in, isn't it? Is that right? Yeah.
Yeah.
November 24. So yeah, obviously sentiment was crazy, bullish, and everyone's thinking, the red wave, Michael Saylor coming out with that.
Wait, it's mad to think that Trump's been in 1 year only, and that's crazy.
I know. Yeah, it feels like forever, doesn't it?
Yeah.
But yeah, in that year, I thought this is potentially so. I'm using these cycles. If you've seen Camel, what's his name? Camel Finance's channel. He often goes on about these like 60-day cycles, and it's amazing how often they're playing. Even though I'm horrendously wrong with where I thought this would go, I thought there could be like some sort of blow off peak, and then I thought there'd be some massive pullback into like middle, summer of the year, and then I thought there might be like this, what's it called, like a dead cat bounce sort of thing. I mean, if you look, I'm not a million miles away from like where I thought. I thought it was going to be around somewhere like 70,000 now, and like there was going to be some sort of peak in October at 140, and I mean it went up to like 120. So it's not a million miles off, to be fair, although it really was really badly off there. But those green boxes was allowing for those sort of 60-day cycle peaks. So I mean, even if you sort of like line those up, there's kind of like, that was the peak of this cycle, and then it sort of went down again. Like that's roughly where the peak was, and then it went down again. That's roughly, there's some sort of peak here, and then it's gone down. And there was this big pullback. It was just earlier than I thought, and then it just kind of had the rally after. So, and then again, I reassessed and thought, what was this, Feb this year? Thought, I'll see where this goes, and like I was thinking it could do something like this, and then again some sort of big thing into the summer, because there had been this massive, it was the tariff tantrum and all that sort of stuff around this time when Trump was doing all these tariffs. I was like, oh, that's probably the pullback then that I was expecting here. So I thought it could come back down, and then maybe like into late this year or early next year, which again, at the minute, this looks horrendously off, but who's to say what's going to happen in the next few months? Like this is clearly, again, if you look at these blue arrows, again, I know it's really messy, but Cam often talks about these weekly cycles, which happen roughly twice a year. So roughly every 6 months, 6-7 months. So there's going to be some sort of weekly cycle. So this was April. This was the tariff tantrum. That was the weekly cycle there. This might have been here. It could do another lower low, and then this would be the weekly. Wherever the lowest point is, that would be the weekly cycle here. So it could be here. It could be shifted to if there's another puke here. But then out of those weekly cycles, I mean, if you go back, pretty much every time there is one. That's one there, one here. Every time out of them, there comes a bit of a relief rally, if nothing else. So I think worst case scenario from here is we get, a rally into like 100, 110 in the next few months. And that's worst case. And then roll over into what is looking more and more likely the end of 2026 is going to be a huge buying opportunity. Again, none of this is financial advice. This is just pure speculation. Stupid things that I do. My stupid monkey brain getting the better of me. Obviously, just stack sat, stay humble, don't do any of this stuff. It works out far better.
This is the degenerate brain taking
This
over.
is the degen brain, which I need to just remove from my brain altogether. But it's just a terrible bad habit that I can't get rid of just yet.
What I don't get
I would like around this time to just be completely out of this and literally just be very heavily allocated into Bitcoin and dollar cost average. I already dollar cost average, but like pretty much living as much off a Bitcoin standard as I can. I still can't at the minute pay my rent and stuff or mortgage using Bitcoin. And there's certain things that I just cannot do in this location. And we kind of have to stay here for the next patch of time. So I say have to, obviously you never have to do anything. You can choose, you can always make something work. But in our current situation, that's kind of the way that I am. But then pretty much everything else will be heavily into Bitcoin sort of thing. And it's just going to be a very heavily concentrated bet. I still have some gold and silver. But I think until you reach a certain level of wealth, where you're like completely financially free, whatever that number is for, it's going to be dependent on it. Everyone's going to have a different number depending on family, lifestyle, location, monthly expenses, all that sort of stuff. But until you reach that kind of level, I really don't think it makes sense to diversify, because you're basically just backing the losing horse. And I think it's quite clear what I think is going to be the winning horse.
This is my thing at the minute, where I'm like, right, well, I would like to get to 1 Bitcoin. And quite a few commenters have been saying, well, it's unwise to put everything into one basket. Have you thought about gold and silver and stuff? I'm thinking, yeah, but I ain't even got 1 Bitcoin yet. So
exactly.
Once I get there, then I'll reassess. But my current goal and focus is to get that. And then I might be like, oh, well, I'll try and get 2. Or I might think, okay, now's the time to diversify, quote unquote, diversify.
Exactly.
A bit of a boomer term anyway, diversify the portfolio, I think. But
yeah, well, I mean, if, again, like I say, if you're playing with multi-millions, or, you've worked your whole life and you've got a lot of money saved up in some sort of pension pot or something like that, then it would be quite crazy that at the end of the day, even though I am like fully convicted on Bitcoin's future and where this is going and what's happening, and analyze all the risks,
it's still not a guarantee.
Nothing in life is a guarantee.
Exactly.
Nothing is. And even though I still think even if something completely messes something up or whatever, and Bitcoin went, all the way down into like 10,000s and below again for like a sustained period of time, I still believe at some stage people will figure it out. And maybe it's not even going to be Bitcoin. Maybe there is like Bitcoin take 2 is created and it sort of starts again. I think the cat is out the bag though now. Like there's so many people that fully understand this and are going to do everything they can to keep it decentralized and secure. And it's only growing. That number is only growing. Like we've spoke about so many times, like as in me and you are an exact example of this. This time last year, I wouldn't have classed myself in that bucket at all. Whereas I just feel like the more I've stepped into the space, the more I've gone to in-person meetups and things like the conference in Prague and things like that, it just makes me even more certain. And like just, seeing real people who really are all in on this, or living in a circular community, already just living off Bitcoin and speaking to real people from all kinds of different environments and walks of life. It's like, this is actually already this is already happening. Yeah, it's just whether you choose to. It's just like whether we choose to. Everyone has that choice.
Yeah, people are already doing it. I also think that the amount of countries now that are on board with mining it and that kind of thing, and the amount that entire nations and huge institutions have put into it, I think it's probably they're not going to do the same thing for a secondary.
That's exactly it. So I think these charts, more so than the price, I actually think
the hash rate.
This is a much more interesting chart, in my opinion. Like if this comes back down here for a sustained period of time, then we can have that conversation. That anyone that wants to have the conversation of Bitcoin is dead, do not have that conversation with me until this chart does not look like this. Basically, like, and I mean, I can just keep going. This is not even me cherry picking anything. Like, go and look at this yourself if you don't believe it. Like, this is the hash rate of Bitcoin, which basically is how secure it is. that's really how I read this chart.
Yeah.
The higher that line goes up, the more secure it is, and it is only going in one direction. Like it is literally going up and to the right. And anyone that cannot see that is either lying to themselves or and that's on log as well. So, when you take it off log, it's literally what is that called? Like a parabola, where it's just going. It is the chart for compound interest, and until that stops, there isn't a debate to be
for
had.
What?
In my
Compound
opinion.
interest. What did
Have
you
you
say?
seen? Yeah, have you seen compound interest chart before? Where it just
like a is it exponential?
exponential growth? Yeah,
Right.
exactly. So I mean, for a long period of time, this looks like it's doing nothing. But the crazy thing is when you actually see over here, if I can hang on, I've got a better way of doing this. It looks so even over here, it's like, so if we go back to, again, this is like a flat line. Look at this around here. But if you go back to 2015, that already looks like a parabola. And you think, oh, so there's no way, that must be right at the top. There's no way that continues. You go one more year, it just keeps going. It goes up another 7 times. And then what are we at now? 7 million? This is at 7 million. You go another year, it's now at 60 million. That's another 12 times, and that's just 1 year. And then there's these big pullbacks and people are like, oh my God, Bitcoin is dead. It's gone down from like 60 to 35. So it's 50%. And what's this? This is in November 18. So what's time is that? That's exactly when, that's the bottom of, so 2017 was the peak. So this is December 2017 here. Oh, I've marked the lines. Yeah. So this is the peaks. This is when Bitcoin was at 20,000. And this is during a terrible, terrible crash down to $3,000. So in this time, it's gone from 20,000 here to 3,000. Does this look anything like people are running away and moving away to this? And this is what I mean. This is the sort of stuff that I looked at when I was like, this has got to be a scam of some sort. And then obviously in here, this is when China banned mining, and it went down 170 down to 80. So that's more than a 50% correction of the hash rate. It literally, like, China was supporting mining at this time, and they banned it, and it completely went away from there. And look at what happened. Like, the parabola just keeps going. And this is exactly what I mean about, this is a chart of exponential growth. And anyone that cannot see that or disagrees needs to go and look at what exponential growth charts look like and compare this to the, it literally is it. And that's not the only chart that I think is really cool. I think this one, the total number of UTXOs, I'd argue this is arguably just as important, because some people go on the unique addresses, whereas the thing is, because of things like Lightning, this has really been, so Lightning was around 2017, so this is December 2017. Because of Lightning addresses now, so many people transact and just basically use Lightning, which is not a unique address on the base layer chain. So I think something like UTXOs is much more important, because that shows like how many individual wallets someone had, or like how would you simply describe UTXOs?
Individual chunks of a Bitcoin, individual coins, something like that. Individual,
but it's like people within
unique
your
transaction output. Yeah,
it's like within your one private key. Yeah, you will have dozens / hundreds of UTXOs within. I guess a
UTXO will be like a what's the word? An entry on the Bitcoin ledger. So how many entries are there on the ledger? Does that make sense? Would you see it as that?
Yeah. And it's basically like, so obviously you can have hundreds or dozens or as many as you want, basically. And the more that you have, the more engagement there is on Bitcoin, is the way that I see it anyway. Does that sound fair? I don't know if I'm explaining that very well. But again, I just think that's a really important chart. Again, if this comes way down and stays way down for an extended period of time, then we have something to talk about. But again, look at how that's going. The other one, is transactions excluding popular addresses. So yeah, a similar sort of thing.
Where have you got these charts from?
This is all TradingView.
Oh, very interesting. The mean value of a transfer.
I don't know why I've got that one. I don't even know why I had that. Bitcoin total transaction fees. So again, yeah, it was really interesting. There's lightning happens here, and so the fees have come way down. And so people see this as like some sort of issue because the miners can't be sustainable. Basically, this time in 10 years, what is it? By 2035, there's only going to be 1% of Bitcoin left to be mined. So the point that people are making is like miners are going to need more fees to sustain themselves because the rewards are going to get smaller and smaller. But again, people are missing the price action, the change in price action. So if the price action keeps doing this, but going up and to the right, then even though you get less Bitcoin, the price is more. I think I worked out at some stage in each halving, even though you get half of the amount of Bitcoin, the dollar amount that you're getting has increased on average over each halving. If that makes sense.
Yeah, it makes sense.
At the minute it's 3.125 Bitcoin. 4 years ago it was, just last year before April 2024, it was 6.25 Bitcoin. But during most of this time where you were 6.25 Bitcoin, you probably get him. Let's just do some quick maths. 6 times, let's say 40, so that's 240,000. Whereas since it's been above, what was it, April? So here, so since it's been 3.125, the average so far has been somewhere around 100,000. So you're getting over 300,000, if that makes sense, in dollars. And and again, until that changes, then I don't think there's a discussion to be had, sort of thing. So
what I don't get is these, if you go back to the Bitcoin USD chart, like this price, which is fluctuating like every second. Where does that number come from? Like, who's deciding that? Is it the average of all the centralized exchanges, what they're selling it for, or like what is that? Who decides that number? What is it?
What this part? Yeah, that's basically what it is. So this one is.
So if more, is it literally as simple as that? Like if.
So this
I
is
just
from.
don't get how that price is set.
So there's different ones, so there's Coinbase, and then there's this is crypto. Is that crypto.com basically, I think? And then there's Bitstamp. So you can find different ones, but there will always be, with how big it is and how much it's traded now, there will be because I think at some stage people used to do, I heard Andreas Antonopoulos speaking about this on like that old Joe Rogan podcast the other day, is he was at that stage in 2014, he was using what's called like arbitrage. So he was basically buying Bitcoin on one exchange and selling it on another because there was a spread, there was a gap. So he could
really?
buy, and he had found like a couple of or a few exchanges where there was enough of a difference where he could buy it on one, sell it on another within like minutes, seconds, however he was doing it, and just basically printing money because there was if you were buying it for $1 and buying it for $1, selling it for $1 and 5 cents straight away, you've just made, if you do that with $1 million, then you've just made whatever that is.
He's next level, that guy. He's next level, that guy, isn't he?
Yeah, exactly. But now there will be a very, very small difference between exchanges because it's so heavily traded, sort of thing. But I just wanted to sort of show this as well on. This is something, again, the monkey brain that I've been looking at, is these trend lines again have been it's so amazing how often this has happened. So just to show you an example here. So this was the tariff tantrum era. Basically, as soon as you get, so you always like try, the way that I do it anyway, is take literally the top of the wick and you try and get like touch points, look how many times it like bounces off. So that is clearly a trend line. And then there's this one like fake breakout. So basically this is what Camel often talks about, is you never trade on a wick or like mid part way through the day, is you need confirmation, and you don't just do it on one. So this is the first daily confirmation that we had in, what's that, 12th of April. So you could then, this is the sort of time where he would enter a long position sort of thing. I don't really do any of this. I just find it's useful to know, just because then you're not so much part of the herd who's like jumping and screaming. Like basically all of this action here is complete no man's land. Nothing has changed. It's a downward trend. It's another day. You don't need to worry about anything. As soon as you get like 2, 3 closes, 4, basically by here, it's very clearly broken out of this trend. This line is like, it needs to be down here for it to be back in the trend sort of thing. So buying Bitcoin around here kind of makes sense, and you can see what happens. And again, just to show that I'm not just like cherry picking this one time, you go back further.
I see. So it's a way of telling whether the price is going up or down, basically.
Yeah, I mean, this was a really long time, and this was a really like, I don't know if you remember this time. So this was March 2024 until like November 2024. So really like the trend line here is all of this time, literally nothing is happening until you get out of here. And so even like here, there was a couple of like fake breakouts, and then there was a breakout, and then it sort of came back down and came back. But any of this time around here, this makes sense. Whereas doing anything in this patch of time is just what the herd does.
This is what's called,
and then look what happens
support,
when you break out.
Is that what's called support?
That's resistance here, because it's resistance. The support would be at the bottom. So you could arguably do the same sort of thing with these lines, but it was really messy around here, and people were drawing stuff like this, and it was a messy.
You've got the thick red line, but then there's a longer, thinner red line going lower. What's that?
So that's called a wick. So that's on the day. So this is a daily time frame.
Yeah.
This is the open at the top. This is the close at the bottom. If it's red, it's open at the top, and the close is. So this is
open
the
and close
here.
of what? The day.
The day. So during that day.
So for Bitcoin, would it be like?
I even knew what day that was. That was 5th of August. I remember this day so clearly. Like people were freaking out. Like the shitcoin space was like, people were like, "Oh my god!"
Wait, was that this year? Mental. Oh no, what was last year?
Last year, August 5th, and everyone was like, "This is it. This is the end of the cycle." Because what was really weird here is we had before the halving. So the halving was sometime around like April 2024, and everyone was like, Bitcoin never goes past its all-time high before the halving. And so all of this time here, people were like saying, this is a fake breakout. Don't believe it. Don't believe it. Don't believe it. And it got to here, and people were like, shit, this is going to do it. It's around somewhere 69,000. And then it like decisively went through it and stayed there for a few days. And people were like, as soon as it breaks to an all-time high, if you look at the chart historically, it just keeps going. And so people were now calling for like 100,000 within the next month, so people were sort of thinking it's just going to go bananas from here. And then this happened, and it just literally so much time of nothing, and people can't deal with nothing. People need to be like, and then so by this stage of like 8 months of nothing, then when this happened, and this is now Trump coming in around here, I can't remember what happened in August. It was war. It was World War III. It was all this stuff. It was all the Gaza things, and all. Everyone was thinking World War III is about to happen. And then obviously within just a few months, Trump's in power. There's going to be the red wave. Number's going to go up forever, and then so people then ape in here. Anyway, I'm talking.
So one last thing then. If using this system you've got, if you look at the current chart, you've just done a line.
So it's really, that's why I quite like.
It's not broken. Well. It's not broken the line.
Exactly.
Therefore,
we are still
it's not the time
in no man's land. And I think, do you remember like a few weeks ago? It feels like a few weeks ago. I don't know. it was maybe like, yeah, sometime around when I was moving house and everything. And I said to you, if Bitcoin decisively gets above, like, I think I said 93, but it looks more like here, 95. If it decisively gets above 95 next time, I think I said next time Bitcoin gets above 95,000, it'll be interesting for the next few months. And that's exactly why. It's because I was using this trend line, the same sort of trend line as what I've used here and it. Not that I trade in and out of Bitcoin. This is just more to give me some sort of, I've noticed, from the book, The Glitch, or Glitch by Rob Brinded, my hamster wheel is it control or something? Is it like control and out of control? I can't remember what that one's called specifically.
I know the one, yeah.
But anyway, that is my biggest hamster wheel. That's what I've noticed, is that I'm not very good at being out of control. And so what I find by me just knowing some of this is it makes me feel more in control. And it makes me be able to explain. And when everyone here is like panicking. I mean, if you speak, like when we're in November,
when in actual fact, his solution would be don't play that game at all. Just stay humble, stack stats.
Exactly. That would be the best thing. But the issue for me is that I know I'm still part of the herd. I know that I'm still have the monkey brain. I know I still have all of that sort of stuff. And obviously I want to be out of it completely. But in this weird transition phase that I'm in at the minute, I find it helps to I ignore all the narratives. I don't need to watch the news. I don't care what's going on in the macro event. I just am aware of how Camel does his systems and how he trades. And this is what he does. And at the moment, so anytime we are under this line, I don't care. Nothing has changed. There is no issue. We could literally, again, from here, we could go back down to 75 or something. And that would be where the weekly cycle would come from, because this would now be a lower low sort of thing than whatever is under this. That was 80,000. So anything under 80,000, that is where the weekly cycle low sort of happens. And again, for the next sort of 2-3 months, that's where it will be interesting coming out of it, sort of thing. And anytime that if there's like a wick above here, so if, in the next day, if tomorrow we went to 91,000 in a day, I don't care. It's only like if we close at 91,000, that's interesting. And if the next day we're above 88,000, that's interesting. And all of a sudden you've got 2 or 3 closes outside of this trend line, which is just continuing to go down at the moment. And then that is a change of trend. And then that is where the next 2 or 3 months could be interesting. Like, again, as everyone always says, it could go up, down, sideways. No one ever knows. But as I've just sort of shown, and I've been looking at this sort of stuff now for way too long and hate it, but I'm yet to see it like not work. And even if I go back to, I think in my last video, I mentioned how even at the worst possible time, like when it was down here, this is when I stopped dollar cost averaging as much, because I was thinking it was going to go lower. But if I don't know if I even really knew about this sort of trend line stuff around there. But if I did, then all I would have to do is wait for this to happen. And that would have literally been like the perfect sort of time. And then as soon as we had like a daily close above there, then that's when you would enter, sort of thing. And
interesting. That's interesting. Okay, so it signals the lows and the highs basically, and when to enter and when to exit. But my only thing is, if Bitcoin is a free market, how is there such kind of a systematic
good question
pattern? How is there a systematic pattern in play?
I think, well, there's a couple of things. I think first of all is Bitcoin is still a very risk on asset, and anyone that says it's not doesn't look at charts, and because it literally follows the S&P really, really closely. Like not to the same scale. Like the S&P might only drop like 5% and Bitcoin would drop 30% or something like that, but it really does follow the S&P, which is typically a more risk on asset, whereas something like gold and silver are like risk off assets. And so people often say, Bitcoin and gold are very, very similar. Whereas if you look at how they trade, it's really not that similar still. And often people will show gold goes up first, then it sort of plateaus, and then Bitcoin goes up. And so you can make any chart kind of look like it follows. But I mean, everything from a macro context does kind of repeat and rhyme. And at the end of the day, it's human beings that are trading this, and anything with human beings doing anything, human beings are the ones that have this fear and greed. And they follow these cycles. And also a massive thing that's happened, particularly in the more recent years, is that Wall Street has cottoned onto this and have seen like how, I mean, it literally just keeps happening. These cycles, these patterns just keep happening, and they'll see where all of this like short sellers are and long sellers, and people using leverage, and they'll just flush them. So having these like big wicks down and big wicks up, all of this stage here, it's just like it's called like a liquidity grab. So in all of this area,
it's like playing cat and mouse.
Yeah, the balls are wrong because it keeps going down. The bears are wrong because it keeps going up. And all they're doing here is they're just grabbing all of this liquidity. They're just stacking it all up, and then explodes. And then again, same thing happens. It sort of comes back down. People are like, oh, this is the end of the cycle. Tariffs are in, and then boom, it goes again. And again, same sort of things happening now. And people are like, oh, it's October is the end of the 4-year cycles. And people, again, not understanding that the top of the cycle has nothing to do with these cycles. It's the bottoms and the lows, according to Camel and Bob Lucas and the people that have this cycle theory. So really, like I keep saying, end of 2026 is where I'm looking. I have no idea where the price will be. Don't really care. I just know that at the end of 2026, I want to have cash reserves and be able to deploy it, basically. Yeah. That's interesting. That's it. And I never sell my Bitcoin. So, that is the very simple rule. A dollar cost average. I never sell my Bitcoin. Everything else, all the other, and it's not a lot. It's not like I'm got loads and loads of stuff in all types of different assets. But like this year, I've sold my one rental property, and half of that's gone into Bitcoin, half goes into cash. It's just like a very, very simple rule, because I have no idea where the price is going to go. But what I have learned from doing this for a while now is it's really, really frustrating when it gets to down here and you don't have cash. I know that.
Yeah.
So it's just like, what would be really, really more frustrating for me, even if Bitcoin just blasted off and just went up to 1 million and never looks back, I think I could live with that. Whereas what I would be really, really annoyed about is if this does actually play out and there's it comes back down into some, 50,000 or less range by the end of next year, and I don't have any cash on the side, then
you can't buy any.
Yeah, I would be really annoyed, because it's like I've literally been calling this now, or I've been marked this since this low, since I got this terribly wrong. I was like, these 4-year cycles do have some merit, and then really learn a lot more about cycles during this time. And do you know what I mean? So
yeah, I can't say I quite.
A lot.
Well, I can't say I quite get it, but I understand it more than I did half an hour ago. It makes sense.
Yeah.
And you try and find the trend line, and that shows you where, when it breaks the trend line, you found the bottom, basically. So it's a good time to buy.
Yeah, and I mean, the exact same thing can be done the other way around as well.
But if you're DCAing, as you said in your last video, DCA is the best strategy. You don't have to worry about any of this crap
proven.
Anyway.
Exactly, and then you just don't need to do it. Yeah, exactly.
You could literally, you could go outside and play football for half an hour instead of looking at the charts for half an hour.
Exactly, and the same thing happens on the way up. Like, you can draw trend lines anywhere, really. So that would have been some trend lines.
Right.
So that broke that trend line.
Therefore, that was the top.
But then that's the issue, is that you can sell here, and then you just might not ever get back in. sort of thing, and then it keeps going. And so this is what kills people. Like, and the same can happen the other way as well. Like, don't get me wrong. Like, this could break out, just range around here, and then keep going lower. Do you know what I mean? It's not guaranteed that it has to go up. It just means it's broken the trend. And I think this is where, you know, so many newbies would look at what I've just said there and be like, oh, this seems simple. I can do this. And like try and trade it. And then they'll just get ruined eventually. Like, the market is, what I've learned is the market makes no sense. That any chart makes no sense. Like, it never does. And that's why I was showing you that chart, which looks super messy at the start, just to show you like a real case scenario of like, look how wrong my lines are of where I've thought it might go or what might happen. Like I was saying, is that, oh, you can kind of say, oh, that was kind of like the top and that's the top. You know, I was similar and like, but no, I'm just way off. Like every time I've ever drawn anything, it might kind of look similar, but it's at the end of the day, it's not. It's wrong.
Get a real job.
Yeah, exactly.
Yeah,
that's exactly it. It's like, just focus on providing value. Stay humble.
Stay humble. Stack sats. DCA does seem to be the best thing. Or
no one ever knows what's going to happen. But yeah, what again? Like I say, whilst I'm making this transition, I know what I want to do now.
You're transitioning.
What is in from having
male to female,
other assets, being diversified and having like not that transition. But yeah, like doing all that other stuff. Leave it in. It's fine.
Right.
Do you want to share the book?
Let's share this book. We're actually way over halfway now. Let's have a look where we're at. We're still on the digital money chapter.
Go to the book and there's more charts.
More charts. Yeah, we're getting there. We're on page 184 of 272, so we're like 2/3 of the way through. We're actually, this is the chart that you just pulled up. Annual transactions on the Bitcoin network.
That's it.
We're there. But this is a little bit.
I think I actually might have pulled that up after reading this book last time we were reading it.
So I think we were here while the growth in transactions. Do you want to read or me? I don't mind.
You go for it.
Right then. While the growth in transactions is impressive, it does not. Oh, by the way, to those that were reading the Bitcoin Standard, in case there's any new listeners. While the growth in transactions is impressive, it does not match the growth in the value of the total stock of the Bitcoin currency, as can be evidenced by the fact that the number of transactions is far less than what would be transacted in an economy whose currency had the value of the Bitcoin supply. 300,000 daily transactions is the number of transactions that takes place in a small town, not in a medium-sized economy, which is around the value of the supply of Bitcoin. Further, with the current size of Bitcoin blocks being limited to 1 megabyte, 500,000 transactions per day is close to the upper limit that can be carried out by the Bitcoin network and recorded by all peers on the network. Even as this limit is reached and its presence is well publicized, the growth in the value of the currency and the value of daily transactions has not abated. This suggests that Bitcoin adopters value it more as a store of value than a medium of exchange, as will be discussed in Chapter 9. The market value of transactions has also increased over the network's lifetime. The peculiar nature of Bitcoin transactions makes it hard to precisely estimate the exact value of transactions in Bitcoins or US dollars, but a lower bound estimate sees an average daily volume of around 260,000 Bitcoins in 2017, with highly volatile growth over Bitcoin's lifetime. While the Bitcoin value of transactions has not increased appreciably over time, the market value of these transactions in US dollars has. The volume of transactions was $375.6 billion in 2017. The total by its 9th birthday, Bitcoin had processed, in total, by its 9th birthday, Bitcoin had processed $500 billion worth of transactions, with USD value calculated at the time of transaction. See Table 9. Let's have a look at Table 9. Total annual US dollar value of all Bitcoin network transactions. That's pretty much of an exponential growth graph as well.
Yeah, I'm just getting up.
I think
that's why I got it up last time, is because I wanted to see what it is now.
This is velocity, I think. They call it like.
Yeah. So
velocity.
It's definitely whatever chart I've got is obviously using different numbers to what he's got. So what did he say they were up to? 500 billion? Is that?
That's the total value transacted.
And what is that number?
Until 2017, $500 billion.
Right. So yeah, so this is Bitcoin transactions excluding popular addresses. That's not the same thing, is it? Is it?
No, it'll be like total amount transacted, or like velocity of transactions.
Yeah. See, I don't have that. Let me have a quick look.
I mean, that would be crazy now, because just the other day, somebody sent $8 billion worth, wasn't it? Like 8,000 Bitcoin in one go.
Yeah, it's mad. Well, like every time Michael Saylor does anything. So is it I can get the total amount of transactions?
No, total value transacted.
Total number of transactions.
All right, it's going to be in the absolute trillions of
total
trillions.
Volume, total amount of coins transferred on chain. Is that right?
Probably, yeah. Try that, yeah.
Yes, yes. It's just different numbers to whatever he's using. This is at 68 billion, and the peak was 250 billion in 2021. Yeah, I definitely had a look because I was interested to see what that would look like now, but I don't know what. I can't find the same thing. Any other idea what it might be called?
Velocity of, I don't know, liquidity or something.
There's no velocity, no.
Just put total annual US dollar value of all Bitcoin network transactions.
Total annual
US dollar value.
Where are you reading that from?
Top left.
It just comes up with too many weird things.
I'll keep reading this and then you see if you can find it. But that's going to be mental now.
I did try last time. I can't find the same number. The closest thing that I've got is the sum. Is it the sum? Is that the one? Yeah, the closest thing I've got is Bitcoin transactions excluding popular addresses. But that's not the total sum either, is it?
No.
Yeah, it's not. I haven't got the same thing. I'll keep having a quick look.
All right. Another measure of the growth of the Bitcoin network is the value of the transaction fees required to process the transactions. Whereas Bitcoin transactions can theoretically be processed for free, it is incumbent on the miners to process them, and the higher the fee, the faster they are likely to pick them up. In the early days, when the number of transactions was small, miners would process transactions that did not include a fee because the block subsidy of new coins itself was worth the effort. As demand for Bitcoin transactions grew, miners could afford to be more selective and prioritize transactions with higher fees. Fees were under $0.1 per transaction up until late 2015 and started rising above $1 per transaction around early 2016. With the quick rise in Bitcoin's price in 2017, The average daily transaction fee had reached $7 by the end of November. Then there's some more graphs. Average US dollar value of transaction fees. Monthly 30-day volatility for Bitcoin and the USD index. While the price of Bitcoin has generally risen over time, the rise has been highly volatile. Figure 19 shows the 30-day standard deviation of daily returns for the past 5 years of Bitcoin trading. While the volatility appears to be declining, it remains very high compared to that of national currencies and gold, and the trend is still too weak to conclusively determine if it will continue to decline. The 30-day volatility of the US dollar index is included in Figure 19 to provide perspective, examining price data for gold and major national and cryptocurrencies shows a marked difference in the volatility in the market price of these currencies. Daily returns were collected for the previous 5 years for gold, major fiat currencies, and Bitcoin. The major national currencies each had a standard deviation more than 7 times larger than that of Bitcoin. See Table 10. Table 10, average daily percentage change and standard deviation in the market price of currencies per USD over the period of September the 1st, 2011 to 2016. Don't really know what I'm looking at. What's that chart mean, Mike?
Which one is it?
Table 10.
No, I'm not having much luck looking for that. I'm going to give up.
Average daily percentage change and standard deviation in the market price of currencies per USD. Right, so it's compared to USD over the period of 2011 2016.
Oh, right. So it just shows how like most currencies are very similar to, they just track USD. Like standard deviation means how much it's different from.
Right.
So CNY is that the Chinese yuan, however you say it.
Yeah.
That's the closest to the dollar. Or no, the CHF, that's Chinese, isn't it? I don't know. Whatever CNY is the closest to it, and CHF, whatever that is the currency that's most different.
CHF is Switzerland, I think.
Is it the CHF?
Swiss franc.
Yeah, Swiss franc. So the Swiss franc is the most different. Interesting. What's CNY? It's the Chinese yuan. Yeah. So the Chinese yuan is closest. Interesting. I wouldn't have known that. And then gold is obviously more different than any currency on that list anyway. I don't know if that's all currencies. I can't imagine like if it's hyperinflation somewhere, surely that's very different. And then Bitcoin is way more different than gold even. So, and the average daily percent change, does that mean gold is being a minus? Does that mean gold has gone down to that? So this is between September 2011 to September 2016. Yeah, gold would have actually gone down compared to the dollar because that's when gold had that big run up end of 2011. Yeah, it would have only gone down slightly. Let's have a quick look.
I'll just read the next bit.
That's all that means.
Thank you, Professor Mike. I didn't understand that. Bitcoin
That still not make sense.
No, it made sense. Yeah, I didn't understand it at all.
Yeah, gold went up to 1,800 in the end of 2011, and then what is it by 2016? 2016, it was down to like 1,200. But right now, it's 4,500. So
it's popping at the minute. Bitcoin's volatility derives from the fact that its supply is utterly inflexible and not responsible to demand changes because it is programmed to grow at a predetermined rate. For any regular commodity, the variation in demand will affect the production decisions of producers of the commodity. An increase in demand causes them to increase their production, moderating the rise in the price and allowing them to increase their profitability while a decrease in demand would cause producers to decrease their supply and allow them to minimize losses. A similar situation exists with national currencies, where central banks are expected to maintain relative stability in the purchasing power of their currencies by setting the parameters of their monetary policy to counteract market fluctuations. With a supply schedule utterly irresponsive to demand and no central bank to manage the supply, there will likely be volatility, particularly at the early stages when demand varies very erratically from day to day, and the financial markets that deal with Bitcoin are still infant. But as the size of the market grows, along with the sophistication and the depth of the financial institutions dealing with Bitcoin, this volatility will likely decline. With a larger and more liquid market, the daily variations in demand are likely to become relatively smaller, allowing market makers to profit from hedging price variations and smoothing the price. This will only be achieved if and when a large number of market participants hold Bitcoins with the intent of holding onto them for the long term, raising the market value of the supply of Bitcoin significantly and making a large liquid market possible with only a fraction of the supply. Should the network reach a stable size at any point, the flow of funds in and out of it would be relatively equal and the price of Bitcoin can stabilize. In such a case, Bitcoin would gain more stability while also having enough liquidity to not move significantly with daily market transactions. But as long as Bitcoin continues to grow in adoption, its appreciation attracts more adopters to it, leading to further appreciation, making this drop in volatility further away. As long as Bitcoin is growing, its token price will behave like that of a startup achieving very fast growth. Should Bitcoin's growth stop and stabilize, it would stop attracting high-risk investment flows and become just a normal monetary asset expected to appreciate slightly every year. That reminds me of something that Andreas Antonopoulos said in his book, where he talks about comparing Bitcoin to central banks, where central banks have this, what he was saying up here, they have this central point of control where they try and manage everything from the top down to keep it stable. But under the surface, long term, cracks start to show. So short term, they stabilize and control volatility, right? But because they're controlling and stabilizing the short term volatility, long term shit hits the fan basically. Cracks under the surface start to show long term, whereas Bitcoin on the short term, from its inception to now, very volatile because it's more of a free market. There's no central point controlling it. It's all the volatility comes first, and then, but long term, it's going to be a lot more stable because it's done all of the kind of organic, it's more organic of a market. Does that make sense? So it's like, it's like central banks short term control, but in long term is you get
unstable
because the cracks start to show. Bitcoin short term volatile, but long term stable because it's organic.
Yeah, I mean he said
it better than me.
Yeah, that all of this exact topic is probably the big shift I've had over the last couple of years on the fact that Bitcoin really is like it. I think it's made me realize how early we actually are as well. And you always hear people say this, oh, they're just trying to pump their own bags or whatever. It's like, but once you really understand Bitcoin, you realize that anyone saying anything like that no one can pump their own bags by saying good things about Bitcoin. Like it's too big. It's like you can't pump your own bags with a $2 trillion market cap. Like it's just It's ridiculous. It's because of the shitcoin space and people coming from that space into this space. And because that exact thing does happen all the time in the shitcoin space, especially with like new meme coins and stuff. And like the influencer just gets paid like $20,000 to give a shill to an absolute scam. And not only do they get paid $20,000, they'll buy loads of it before they even do this. Then it pumps their own bags. They sell it, and like you are used as the exit liquidity sort of thing.
Yeah.
Whereas with Bitcoin, it's like we are so early, and like you were saying, I don't understand why it should be a free market. So why is this same sort of things happening? I would argue that is exactly why it's happening, because it is a free market. There are so many people that are so confused by what Bitcoin is. So many people just speculating on it and see it as this get rich quick scheme. So they just see it as a trade. They're just trading it. People on Wall Street now, they have access to it as well. So they can literally just go through all that crap I was just showing you earlier of like trend lines and when to enter it, when to exit. And like, so there is so much trend, and it's literally 24/7, 7 days a week, which hardly anything else is. Anything else on Wall Street, on the stock market, you can't even touch at the weekend. You can't touch in the evenings. They have like opening times and closing times. I didn't even realize a lot of this stuff before getting into all this, and it's just made me realize like how terrible the current financial system is. It's like how can you say like you can't buy Apple stock on a Saturday at 3 p.m. Like, why? How is that a thing in 2025? Like, it's like,
exactly, yeah,
this is madness. Like, this doesn't make
exactly.
any sense. And it's just, I don't know. It's like I say, I just think the big shift I've had is realizing exactly what you were saying, what Andreas was been saying as well, was like we are so crazy early that we're seeing this crazy volatile, what people call an asset class. It's not an asset class at all. It's literally something we have never seen as human beings. Like, as long as it stays decentralized and secure, this is the first ever global free market. And once you can wrap your head around that and not just think that's hyperbole or like someone trying to pump their own bags and use you as exit liquidity, it's like, go back to first principles, think about what does, if you could create a money that would be the first global free market, what does it need to have? And it is, like what Jeff Booth says all the time, like if it is decentralized, so no one can control it, if it's open so anyone can use it, you don't need to ask for permission like you do with so many things. There's over half the world don't even have an access to banks, and so when people who are from the Western world hear that, like, yeah, but I have access to everything, but equally you don't. Like, there's a lot of like hedge funds and a lot of things where you need X amount of money, or you need to be in some sort of club where you don't have access to something, like that whole insider trading. And everyone knows as well, like the people that are in politicians and stuff, and people that are close to basic people doing insider trading, that everyone knows that exists now. Whether people might see it as a conspiracy theory or whatever, but it 100% happens. Like, everyone knows there is insider trading going on, and so you do not have access to that as a normal part of the population, sort of thing. So there's tons of things we don't have access to. If it's a protocol, so it is a set of rules, and you can only follow that set of rules to be part of it. You can't just choose another set of rules to follow. Same way with the internet, same way with electricity, same way with the telephone cables being set up. You either use the telephone network, or you use the internet, or you use electricity, or you don't. You can't choose an alternative, sort of thing. And what's the other? Like, it's bounded by energy. Like, if it's bounded by energy, so it's actually got a physical world tie, and if it's secure, like if it has those 5 things, that would describe the first ever global free market. And if you can explain why that wouldn't, I'd love to hear it. But like,
I can't.
Yeah, and that's exactly the point. Is like when you strip it back to first principles and stop thinking of it as an asset or this thing, that's too volatile to handle. That is what it is. And if you look at it over time, a global free market, everything would get cheaper if you live in that free market. And if you have lived within Bitcoin for more than 4 years, everything has got cheaper for you. And that is exactly what it's doing what a free market would do. And kind of like what they're alluding to here as well is that it's so volatile, it's going so quick. And I actually think with AI, this is going to happen at an accelerating pace. Like if Bitcoin is a global free market, the speed that everything gets cheaper is going to increase with the adoption of AI. Basically, what I'm saying there is the price of Bitcoin is going to go way higher, way quicker because of AI and the improvements in tech and things like that, because that's what should happen in a free market anyway. So I guess it will be interesting in the next few years if all of this stuff of like AI taking over people's jobs, if Bitcoin doesn't go crazy, then again, that's another time where we can, like I showed earlier, like if Bitcoin's hash power massively decreases, that's another thing where I'd be open to then being like, okay, well, let's have a discussion around it. But like, until any of these things happen, I don't think there is a discussion to be had. And I've kind of got to that stage with friends where I'm like, it's like you can either choose to learn about it or see what's happening or not. But Bitcoin just does not care. It will keep doing what it's doing.
When you say discussion, do you mean when people say that it's dead?
Yeah, well, like they think it's a scam. They think it's like, it's going to go to zero. They can't see like all the powers that be. They're not just going to let this happen, and they're going to. It's like, I agree. Like they shouldn't. There's no way they're going to give this up. Like, no way they're going to give up this cushy gig that they've got. Like there's no way they're going to
money printing press.
Yeah, like they're gonna 100% try not to let a global free market happen, which I believe is what they're doing now with like. I mean, there's tons of conspiracy theories you could come up, but I do think the whole ETFs, Wall Street getting into it, I think really what's trying to happen. And also, if you think of it from their point of view, they don't want to just be like, they don't want to let anyone know this. They want to just try and quietly accumulate it in as few hands as possible. Yeah. And then they can just take over those companies. Like, if they get a large enough portion of it, then it, rather than them having to knock on 100,000 node runners' doors and coerce them into working with them, they just need to knock on one or two or three. Coinbase being the key suspects at the moment.
Coinbase.
I mean, MicroStrategy custody with Coinbase, so they don't even need to knock on MicroStrategy's door.
I mean, that dude from Coinbase has been living in the White House this last year, hasn't he?
Exactly.
Coinbase have just bought the new White House ballroom or something. So
exactly, BlackRock took 9 of the top 12 ETFs, all custody with Coinbase. So my point is that I think they're just trying to concentrate as much as possible before anyone realizes what's going on in as fewer hands as possible. And I don't think there is anything that they can actually do as long as more and more people understand what I've just said and self-custody, run a node, transact as well. You can't just like self-custody and run a node and let it sit there sort of thing, because otherwise it's no impact. And a lot of people, I think this was a big thing with the whole Knox core stuff. People just see, and this is where the core side, they're like, it's just vanity metrics and it doesn't make any difference. All of these people running knots, like if you just whip up a knots node on a hard drive and it sits there on your hard drive and you never do anything with it, it literally has like no impact on anything. Whereas if you've got like Coinbase node, which is moving tons of Bitcoin all the time and there's tons of activity going on there, and with a ton of Bitcoin, that node is far more important than your node sitting on a hard drive not doing anything. And
makes sense.
That's a big thing that I think a lot of people still don't really understand.
Right. So not every node isn't equal. It's the activity of each node.
So people call it economic nodes or whatever, but I don't just mean like moving £5 to your own wallet and back every day. Like, that's not really an economic node. But it's it's just using it for like what Bitcoin really should be used for. And I think as well, most people will just transact with Lightning, but then once you get X amount, you'll move it onto self custody or whatever, and there will be certain transactions you will do. You know, like for example, probably, you know, if you think it's Bitcoin hyper Bitcoinization or whatever it is, you'd probably on the base layer you'd buy a house with Bitcoin, you'd buy a car with Bitcoin. You know, big transaction sort of thing. That's what would be happening. Business deals, you know, like things where you're probably moving in today's value $1,000
Yeah,
plus.
it's not for micro transactions.
It's not for paying for a coffee. Yeah, you're not. Yeah. It's never going to be used for that, and I think a lot of people get that confused as well. But it should be used. It still should be, you know. So for bigger purchases, maybe even $10,000. I don't know what the exact number would be, but
it needs to be used, definitely. Yeah.
Yeah, just by it being used and people running their own node, self-custody and using it, there is literally nothing anyone can do about this.
I think with, you know, because the possible threats to Bitcoin, people, the average Joe is always going on about EMPs, meteors, all these all kind of bullshit things. I think the main three, and I'm sure you agree as well. First one, like you just said, centralization of the Bitcoin in institutional hands, and then they offer the population these kind of tax-free paper Bitcoin products, but the actual Bitcoin itself is centralized in government or bank hands. That's number one. Mm-hmm. It could be a threat. Number two is the whole Knots Core spam, you know, thing, which whatever you think, it's still a potential threat vector, do you think? But that's a whole other thing.
What, as in spam entering Bitcoin and then getting banned? Is that what the threat is? I'm still confused what the threat is.
I still don't fully know, but like, yeah, I assume something like that, like getting some kind of quote unquote illegal content on the blockchain and there being some bad PR about no running.
It already exists.
It's illegal to running. It's already, yeah.
It's already there. Like, as in, I'm not going to go and personally dig it out, but like, I think, and that's why I think no one on YouTube has done that. But also, it's just like, why would you want to do that? You know, but I think it's pretty common knowledge now that all of these worst case things already exist in Bitcoin. The nodes are already relaying them and everything between themselves. I think what everyone was getting worked up about is the whole, what's that word called? Oh,
CSAM.
Not see. Mechanics says it all the time. Basically, because it's all together, it makes it more you're legally liable. Whereas before, it has to be split up or whatever. But it just, when you dig into the technicality of that, it just really falls apart because it's only split up with like a line. I covered it in my video, like, so, and it's a long time since I really like dug into all this, because I just don't see it as a threat at all anymore, to be honest. Like, so it's basically like a separator between it. And right now there's a tool that already deciphers this. Like, you can just use Audiscan and so me, you, anyone without any technical know-how, just type in Audiscan and you can clearly see whatever image or video or whatever it is that's published using Audiscan. So how would you already not be legally liable if someone puts CSAM on? It makes no difference. And, you know, whereas what they're saying is because it's now that separator has been removed, then you'd be able to see it. But the same thing applies. Like, any normie couldn't just run their node and it wouldn't just pop up on the mempool in your node. You would have to decipher it, find the specific file that it is, run it in like VLC player or whatever that thing is. You know, you'd need to know what your technical know-how, or someone creates a tool exactly the same as what already exists without op return. Like, you know, do you know what I mean? Like, it's not a threat. Like, if it is a threat, it's already a threat to Bitcoin. And I think the big thing that I've heard from more technical people including people that we both know, is that if there's the really big point, and I've forgotten what I was going to say. What was I saying?
It's late. I'll let you off.
what was I saying? The big.
Are you pissed?
I don't know. I don't know where I went there.
There was a really big point about things.
What was I saying? It's so bad.
On that note, see you next week.
No, I need to remember this.
There was a point that our mates that we know at the meetup said about relaying.
Oh my god! What is happening with my brain? Oh yeah, it's basically fuck the police. That's basically it. That's the simple way of saying it. Like, as in, if you're going to worry about this, then you're in Bitcoin for the, or you don't understand what Bitcoin really is. Like, as in, it's permissionless. Like, if you're worried that the government is going to ban it, then it's like already the whole point of Bitcoin is defeated.
Yeah.
And the other thing that you hear a ton. Sorry, what was the third thing that you were going to say before?
Third thing was privacy. Privacy is the third thing which people are talking about now. If every piece of if every Bitcoin transaction is KYC'd and they have these AI chain analysis things and they know everything about everyone, like, that could be a potential issue moving forward. That's what some people say.
Yeah. I think
it is an issue. Like, the state, they can allow people to have digital cash, but they hate it to be anonymous, private digital cash, because they want to know, exactly what you're doing.
I would say out of those three threats, that's the one I've probably dug into the least. But again, because I don't really see it as a threat, because I just think you can build another layer on top of it. The same way as that I don't see scaling Bitcoin as an issue, because you can just put Lightning or Liquid or whatever, a layer 2 on top of it, and you can scale it. It's the same thing as what I can see with privacy. I don't know what that is. Like I say, I haven't dug into it fully enough to be able to really talk around this, but that's what I see.
Yeah. And you can tell the state hates it, because people that build the privacy tools for it
go to jail.
They get thrown in jail, exactly. For literally nothing.
And that's for exactly for writing code. Yeah. And I think that, again, that's just more proof that what I just said is true. Do you know what I mean? Like, as in, and this is the thing, is that I feel like that they've thrown people in jail for literally trying to make Bitcoin private and by writing code. And that just shows that is true. And so this was the exact thing the tangent.
It shows that it's a threat, Jimmy, or
exactly. And so anyone that is like, oh, but what if the government's ban it, or the government's ban it because the CSAM on it, or anything like that? Again, that's just proof that this is the real thing. This is the free market. And what happens when that? So what will happen if, like, let's say tomorrow, Great Britain bans anyone running a Bitcoin node because CSAM has entered it? What would happen is anyone that really gets Bitcoin would be very, very incentivized not to live in the UK anymore, or in Great Britain, or the US, wherever this happens. And what would then happen is other countries that are like opportunistic would see that and be like, hey, we'll take you Bitcoiners, And so all of a sudden, and I think this is the other thing as well, is that I keep saying to friends, it's like, just have a look, just keep an eye on what happens with El Salvador. And everyone's like, oh yeah, but there's no adoption in El Salvador. Like, Bitcoin Beach is not even using Bitcoin, blah, 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 all this straight away, the negative things. But just have a look at where El Salvador was before they started accepting Bitcoin as legal tender, and have a look at where they are in 5, 10, choose your number, years time, and just compare those two, or even just compare it to where it was then and to where it is now, and keep comparing it and keep an eye on it and keep seeing what's happening, because that is literally real time, real world data on what will happen in a free market. If El Salvador becomes ruined and totally torn apart or something like that, I mean, sure, Bukulele could get coerced, and I mean, there's already stuff
Yeah.
going. There's already stuff going on
Yeah.
there, isn't there? Like they.
You can already imagine it. Like the newspaper's like, Bukele is about to invade America. He's like, no, I'm not. It's like, he is. He's invading America. We've got to get him. He's like, no, bro, I'm not. I'm literally not.
Yeah.
We have to get him. He's
Well, I mean,
building camps for the people.
this is,
I'm not, bro. I'm literally not. He's, yeah, you know.
yeah. No, I think
That could be a thing.
But yeah, I just think again, these are just all very easy like data points. All that stuff that I showed at the start, all those sort of charts, like that, it's just available to anyone, like without any technical knowledge, and you can just look at this. And until any of those, not even just, it doesn't have to be all of them. Until one of them stops doing what it's doing, and until El Salvador goes up shit creek and becomes in turmoil because of Bitcoin, then there's just, I don't understand what people's arguments are anymore. It's like you just haven't even given it any thought to consider this. You haven't even considered that it could be a free market, and to me that's just lazy. Like, you know, just. But I say that, but equally, I've obviously been through years of thinking Bitcoin's a scam, and during that time, while I'm going through that, there are hundreds, thousands of people living on the Bitcoin standard that already know everything I've just said there. So I can't just jump to the conclusion like that people are being lazy, because I've been there. You know, and so it's this really hard point in time, I think, where we really are just so crazy early that no one understands. No one can see how early we are, because it literally just sounds like you're crazy. And so it is hard. And I think that's why the Bitcoin space is so cult-like, religious. There's people like compare it to like religion and things. And I think that is because it often feels like you're alone, that no one really understands that, you know, that you're just weird, or you've got these extreme views almost. Whereas what in your head, it seems totally normal and everyone else seems weird. And so
No, in my head, I'm weird and I have extreme views.
But yeah, I think that's it just shows like how crazy early we are. But equally, there are very easy ways to completely disprove everything I've said. You know, like if it really does get centralized, if any of those things, you know, if the hash rate completely collapses, if UTXOs drop off a cliff, if El Salvador becomes terrible, or any of these countries that have adopted it just struggle more and more, or go into hyperinflation and things, then, you know, then there's a discussion to be had, I guess. But it's kind of got to that point with me where I'm just like, oh man,
it's definitely heating up. Like the last year with countries and all the institutional adoption, everybody now wants as much Bitcoin as they possibly can. I reckon it's going to be an interesting 5 or 10 years.
And I remember when Trump was saying about we're going to make Bitcoin a strategic reserve, I was like, there is no way anyone's going to do that and just allow the price to go, pew, like, you know, because
I don't think it would happen anyway. Like the moment that he would validate it to that extent, surely the dollar itself would just drop off the face of the earth, because, you know, like the dollar is backed by, like, I mean, what's it backed by? Power, like war, like some kind of mystical illusory force. I don't know.
I do think
but if he comes out and says, yeah, we're actually going to buy Bitcoin's better than the dollar, people will lose faith people are already losing faith in the dollar.
Yeah. But there's going to be this weird patch of time that we're already in this transition between people figuring all of this stuff out and not where the dollar is actually probably going to be the best currency though. So this is why stable currencies, you know, USDT and things like that, are just getting more and more adoption. It's because it's far better than most other currencies in the world. And I think it's weirdly going to like support the dollar for longer because of stable currencies, and arguably because of Bitcoin is going to actually help keep the dollar going for longer.
So you think
than
the dollar will be like one of the last fiat to drop?
Yeah, well, I mean, it's kind of like the strongest one. It's the safe haven out of all of the shit coins, So it's yeah, I do think it will do well compared to other currencies over the next few years. And when I say few, that could mean one or two, or it could mean 50. Who knows how long they could drag this out for? It could be 100.
Exactly,
Like they
could be decades. Yeah,
they literally could drag this out way longer than what anyone thinks.
Yeah.
And people in the Bitcoin space are like super like, no, this is imminent, and it is imminent. In the
well, it's inevitable. It's inevitable.
If you look at like
imminent,
5,000 years of human history, then yes, it is imminent. Like it's crazy imminent. It's very likely within our lifetime that there is this big change. But it doesn't, again, nothing is guaranteed. And like what people say is that they're not just going to give up this power. They are 100% going to, I think a lot of people as well just think like the Fed is stupid, or, like a lot of these people are like idiots or whatever, but they are not. They're really not. Yeah, they definitely know what they are doing.
They know exactly what they're doing.
But yeah, it'll be interesting. It'll definitely be interesting these next few years. I think up until 2035, that's what I see anyway as the huge. I think this will be the biggest move these next 10 years in people understanding the stuff that we're talking about here. In people understanding this book, like if everyone could just, if somehow through AI, if everyone could just absorb what is said in here.
No, not through AI, through the podcast, through the 50 hours of video podcast we've done.
Well, yeah, but that's the thing. Like, no one listens to 50 hours of podcast.
True. True.
And so, if there was a way it could just be inserted in the chip and they would instantly know this, then. But that's kind of what I see happening at the minute. And it's one of those things, isn't it? You've always got to be aware that are you just in an echo chamber and you're just seeing what you want to see. But it definitely seems to me like more and more people are figuring out there's something wrong. That is in,
oh, definitely, yeah.
Like I was saying to you before we hit record, like I think, what was it, 2016 when I was like bought some gold and silver. So it's like I've known about this, but it was probably around 2014 where I really started diving down this rabbit hole. I think the question that got me started on this was, how can every country in the world be in debt?
Yeah.
If you think about that from first principles, it makes no sense. And then realizing,
who are we in debt to? Some aliens like on another planet?
Exactly. And then realizing, debt is money. Okay, so money is a total scam. Right, okay, I've got that now. So once you get that, then you can move on to the next step. But until you get that, it's very hard to figure any of this other stuff out. But yeah, and so, like I say, I've had 10 years roughly of going down this rabbit hole and finding different people in the space that are saying a similar thing or coming from a similar angle, whether it's from gold and silver, or whether it's from Bitcoin or whatever it is. But it's very clear on what the problem is, both the gold and silver community and the Bitcoin community. So is it that I'm actively seeking it, or it's finding me through the algorithms or whatever, or does it mean more and more people are actually getting this?
Oh, I know what you mean. Yeah. I know what you mean. Yeah. It's hard to tell sometimes, isn't it?
Exactly. And is it just because there's more and more content that's come online in the last 10 years as well? It was very hard to find this sort of information 10 years ago.
I know what you mean. I think you can tell often by the size of certain channels talking about this stuff. Do you know what I mean? So for example, like, I mean, there's many examples, but like, let's say like, if you were in the 2017, maybe Joe Rogan had one or two Bitcoiners on, or like there's one or two Bitcoin podcasts. Now there's like hundreds, and
That's true.
Bitcoin's mentioned on like Sky News every day and Forbes. So that's definitely more. Donald Trump comes out and talks about it, so it definitely is more of a thing. So it's not just like some weird underground niche.
Yeah.
Like I remember like 2015 or so, all this like Epstein stuff was coming out online. And it was literally just like in the dark niches of like the online conspiracy forums. And then when he came out, I saw it on the news that this dude had like been found dead. My mind was blown because this thing that these nerds these were following on these dark underground forums, it come onto the mainstream news, and I was like, wait, what? How are these normies in the street talking about this Jeffrey Epstein guy? This has just blown my mind. Like that, I can't. The two worlds don't usually cross over, and that was like, so okay, that's blown up like into the real world now,
Yeah.
and now that's just blown up everywhere. So when you see it go into like these bigger channels, you know that it's getting traction. Or if the average Joe's talking about it, like down at the farm, which I go to, I might mention it, and even like old ladies, they're like, "Oh, Bitcoin, yeah, I've heard of it. Yeah, I'd like to know about that." It's not just. It's not like. But if you were to talk about like Monero to the average Joe, they wouldn't know what you're talking about.
Which isn't
Like
a bad thing.
Monero is underground still. Do you know what I mean? Like that is an underground. That is like a very niche thing.
Yeah. I do think a lot of like shit coins are going to put such a. I think it's going to slow Bitcoin adoption down because there's going to be so many people that have been really badly burned from it that they just lump Bitcoin with crypto, and so they just see it all as a scam. And this is the thing that I think I look back on when I was thinking for ages Bitcoin was a scam. I think I was actually right just about crypto, not Bitcoin, and I didn't see the difference. And it's the same as when I speak to a lot of friends and stuff now. Or
Oh, well, me too.
like I asked the taxi driver the other day, I was like, "Do you accept Bitcoin?" He was like, "Oh no, I don't touch them. They burnt me too much." I was like, "Not them, Bitcoin." And he was like, "What?" I thought, "Isn't that just crypto?" I was like, "No." Like you gotta dig the rabbit hole, but it's obviously you can't orange pill someone in a taxi when you're about to pay. So it's it would, well, like I say, I just think these next 10 years, I think we'll get our answer one way or the other. And I just think a lot of people say as well, like gold is the canary. Is it canary in the coal mine? Like it's the. I mean, it really only moved from what was it, 1970 to 1980. So that was like a 10-year, like it's around 8 years, 8 to 10 year window, and then again from was it like 2004 to 2011. So again, about an 8 year window. And I mean, it's very clearly moving again now. And so it happens in these like 8 to 10 year windows. And we're in one now, which really started probably in the end of 2022. So you've really got until 2030 where gold's going to have its move. And when those previous two moves happen with gold, something big happened. So, like 1971, that was literally the change, like dollar coming off from gold. So there was like a huge 10 years, a lot of things. And then there was the crazy inflation. It was in the 80s with Margaret Thatcher and like interest rates going sky high. I don't know if you ever spoke to your mum about that patch of time.
No.
It's definitely worth a chat and just see what she remembers. And see, like,
when was that? Early 90s, was it?
I think it was
late 80s.
I think it was 80s. Yeah. Let's see, inflation 80s. So peaking around 18% in the UK in 1980, which is the exact time when gold was going crazy. So 1980 was, well, it went up to about $800. So it was at $35 an ounce, pegged to it forever. Well, not forever, but like since 1940 or something until 1971, $35. And from when they removed it, it went from $35 an ounce to 800 by 1980. So what's that? 25x in 8 or 9 years. And then obviously up until 2011, that was the big housing bubble, 2008, great financial crisis and everything. And I mean, gold's moving again now. So, like, do you think that's just?
I know what you mean. It's the
connect. That's just random. Like, you know,
yeah, is that? What you mean.
Does that mean was COVID thing and like that's it? And with that, I don't think so. Like, you know, at the end of 1980, that's when inflation was up at 18%. You know, so something happened basically at the end of that. And 2008, there was the biggest financial crisis probably anyone listening to this can remember. If they, and maybe some people don't even remember it. Like maybe they weren't old enough or whatever. But
or maybe no one's listening.
that's more likely.
Yeah.
So yeah.
Well, we'll see. Yeah, it's definitely going to be an interest. I mean, as I said before, I can't believe Trump's been in for 1 year. Like this year has been mental as it is. It seems like it's
feels
lasted
like
for 5,000 years.
Time. Yeah, exactly. I mean, can you believe that it was only July that we went to Prague?
I know.
It's like 6 months. It feels like years ago. It's a weird. It's a weird time frame in the Bitcoin space. But yeah, it'll be interesting.
Should we call it a day, brother?
Yes. Yeah, I should go to bed.
Me too. Right then. I'll see you next time. Peace out.
Cheers, guys.
Peace.